Good morning, my name is Michael Pate. This is the Killik & Co podcast for Friday the 24th of October. Chart of the week is the Eurozone PMI. This is economic activity within the Eurozone. This number came out early in the week and we saw a big bounce in Eurozone markets. That's the DAX, which increased by 2.3% on the announcement of that good number. And that's symptomatic of the fact that the market's very worried about Europe moving into an economic slowdown, and this number suggested that is not the case at the moment. So key events were, on the macro side, pretty supportive. So we had Chinese GDP, which was in line, Japan manufacturing PMI, which was still in expansion, Eurozone PMI, as I've discussed, particularly the German PMI was a good number, suggesting Germany is still expanding. September car production was very strong, so reversed that weak August number. In the UK, we had slight fall in UK mortgage approvals. That was echoed in a pretty bad statement from Foxtons in terms of London activity. And we saw this volatility we've seen in the last couple of months start to stimulate more dovish messages from the central banks around the world. So here's the Japanese PMI showing that economy is back to growth, having had a bit of a pullback earlier in the year. And overall, I think we feel that the global GDP level remains satisfactory. So we're not going into a global recession at the moment. We can see the month-on-month numbers remain pretty healthy, despite what markets have been doing recently. So given that, what's leading the market? So we've started to talk about the smaller companies in the States starting to lead the market. We've seen a little bit more of that this week, as we have with the NASDAQ, starting to suggest there's more risk appetite coming into the market. And the Dow had a better week this week, and it's now back above its 200-day moving average. Whether that continues to be the case, we shall see. But that's a pretty important technical indicator that a lot of people are looking for in terms of measuring whether this market is breaking down. So key corporate events, huge amount of results this week. Q3, we've now had 60% beat on revenue, 78% beat on earnings. Within the mix, it's been very interesting. So we've seen some of the big stalwarts in the US, Coke, Walmart, McDonald's miss on the top line. Of the Killik & Co stocks, we had a good update from Verizon showing very nice growth in average revenue per user in their data business, and strong growth in Internet of Things and video business, which is the key rationale that people are absorbing and using more data with their mobile phones. So that looks on track. Glaxo also came out with a reassuring update. We've got a $1 billion cost saving program, potential sale of their HIV business, and they're going to maintain the dividend and announce a buyback. So that was all pretty positive. Apple will go on to talk about a bit. Their numbers were solid. Amazon less so they missed their numbers. So key call from our research department this week was downgrading Unilever to neutral. This is really on the back of their earnings trending down. So here you can see analysts' earnings revisions, and as you can see, that's a downward line there. Analysts getting more negative about their earnings, and at the same time, the stock has held up very well. And here you can see very strong performance when there was a big rotation out of growth into defensives earlier this year. So that leaves the stock on 19 times forward earnings, with earnings actually falling. So that makes us slightly nervous, and that's why we've downgraded it to neutral. Similar sort of thing is happening at British American Tobacco. Again, you can see earnings downgrades coming through there, and the stock price just came off a little bit on their results this week, and we'd be slightly nervous about that. So looking at the results overall, and Coke and Walmart, as I say, and McDonald's disappointing. Is this a structural or cyclical thing? We've been running a healthy lifestyle theme for a number of months now, quarters now. And we think that's we're seeing more evidence of that playing out. So here you can see Nike and L Brands, both sort of sports apparel companies, doing very well. And you can start to see that sort of differential between healthy and what's perceived less healthy in terms of Coca-Cola and McDonald's starting to play out in the share prices. So within that healthy lifestyle theme, what else are we buying? Whole Foods is in that market. They have been a disappointing stock to date, but we're seeing evidence of them trying to improve the consumer experience with signing up with Apple Pay and Google Shopping Express, and we feel that they remain quite an attractively valued and positioned stock at the moment. So Amazon last night missed on both sales and earnings, a poor update. What I've got here is a chart showing price divided by sales, and what I'm trying to say here is that we've seen quite a stark devaluation of the equity year to date. So price to sales in terms of that as a metric for valuation is now down 30% year to date. What we're starting to see, certainly in the analyst conference that we had last night, is investors losing patience with their strategy of investing for the long term and not delivering shareholder value in terms of earnings in the near term. We feel there'll be more and more pressure on Amazon to sort of turn that round, and perhaps this is a good point to be looking at it again, given the attractive valuation on a price to sales basis. So key economic releases for next week. Well, on Sunday this week, we've got the asset quality review. So this is the ECB's review of the European banking system. What they're trying to do here is reassure people about European banks and improve the credit transmission to get some more inflation into the European economy. Here you can see the European Bank Index, which has performed pretty well this week, suggesting there aren't too many fears about what's going to come out on Sunday. Here's the week ahead in full. We've got Merck on Monday. Key highlights, Lloyd's on Tuesday, Visa Wednesday. Thursday we've got Shell coming in, Smith & Nephew. Friday, WPP will be a very interesting set of results to watch. On the macro, we've got FOMC rate decision on the Wednesday. We've got the PMI in the US on Monday, and on Friday we've got an important confidence number, the University of Michigan confidence number, so we'll be watching that as well. Bit of house price data in the UK on Thursday. So looking at Thursday on Volkswagen, it's been interesting to watch this stock. It's a play on European growth. If we do think that people have got too negative on Europe, and as the PMI data from Germany would suggest, then perhaps we could see a little bit of bounce in Volkswagen, because as you can see, that's been tracking that economic data in Europe. And on Wednesday, just looking at Visa in a little bit more detail, this stock has been pretty lackluster year to date. People have been worrying about their Russian exposure in particular. We still think it's a big structural winner. The world is moving from cash and check to digital electronic payments. Card not present payments are growing at 3 times the pace of card present payments, and therefore Visa's advantage in terms of data protection and security is absolutely key. Finally, we've got a chart on Apple and their gross margins here. Their numbers on Monday were very good. Apple iPhone 6 numbers were good, but I think the average selling price and the mix was what impressed the market. So we're seeing the gross margin chart to trend up in Apple, which is something the market got very worried about last year, and probably has been caught short by this sort of this new direction of the gross margin. That's because bill of materials are going down. They've got more high margin revenue from subscription. There's an expectation that the iWatch will be high margin. So we think that can continue, and we think that can continue to drive the Apple share price. So that's it from me. Have a good weekend. Thanks very much.